Thank you, Mark, and hello from London. There have been only a few weekly key reversals this past week, but the ones we've had have been interesting. They actually break down into three categories. One fairly important looking one, a trio of related ones, and then all the rest. I suppose I should obviously start with the single important one, Emini S&P futures. As any of you who received my email on Sunday night UK time saw my posts on social media, this weekly key reversal down last week was an important indicator given on Friday night's close, as it was right at the top of the market, something the bulls out there would, I am sure, not like to see. Interestingly, the follow-through lower seemingly all happened on the Monday, with the lower open and a small follow-on lower. The market halted and started to revert back up, nowhere near any support. The projected 50% Fibonacci level was at 40.82. The rising medium moving average was then at 40.71. Okay, there were some lesser Fibonacci levels at 41.06 and 41.10, but they couldn't have done such heavy lifting on their own. And there was no noticeable congestion or trend line near the lows to help. Thus it seems the move down on Monday was enough for that weekly key reversal down, and the bullish incentive is still strong in this market. It was much like a boxer taking a body blow. That may wind him, but he is still standing and can keep fighting. Indeed, what we now have is the possibility of a weekly immediate countering key reversal up. All that we've seen this week so far. If the market manages to edge over the all-time high made last week at 42.67 and then close over 42.46 on Friday night, then we'd be on. And wouldn't that be a turn up for the books after last week's actions? Watch this one closely. The next ones I'd like to talk about are the trio. There were weekly key reversals down last week in LME 3-month nickel, zinc and tin. Interestingly, not the two main metals of copper and or aluminium, or even lead, but just in these three. Now, I've spoken extensively on these three yesterday in my weekly commentary on LME metals, but I'd like to point out some highlights here today. Let's start with nickel. This weekly key reversal down offset the daily key reversal up made on Thursday 2 weeks ago and the weekly key reversal up made 4 weeks ago. However, the cause of the drop in the first place was a congestion above between 18,400 and 19,070 from August 2014, and this wasn't the first time the overhead congestion had done this. It was, after all, well telegraphed in advance, being as it was from 2014. Yet overall the bullish incentive hasn't been damaged, because the market has below the middle time, currently at 16,950 of the big 2017-2018 shallow bullish shift pitchfork, plus the lower time, currently 16,720 of the October 2020 to March 2021 bullish shift pitchfork, and in between the slowly rising long moving average, currently at 16,785. Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it might be missing. Meanwhile, looking at zinc, in many ways the action in zinc was the most profound. You see, the market broke the bullish shift pitchfork of early July, early October 2020. This pitchfork had run the market higher since early October last year, and breaking it was a seminal moment. At the same time, prices broke down through the short medium moving average, the May 2020 to date uptrend, the medium moving average, and only halted at the big old 50% Fibonacci line of the 2006-2008 move at 28.06. Now, what does that leave us with? Well, we may have a possible bearish bump and run reversal top. It's not as an uncommon pattern as you think, formed since March this year. It all now depends on the market hesitating where we are, in the 28.40-29.20 area. This pattern relies on this hesitation before another big move lower. Watch out on this one now. The last metal was tin. In many ways, the action here in tin was the least most damaging to the overall bullish incentive. It still thrives. The original move back up, which started some 15 weeks ago, translated to a higher level some 8 weeks ago, when prices moved up between the middle time below, currently at 30,335, and the upper time above, currently 32,715, of the January to March bullish shift pitchfall. All that has happened here is that the market has moved down from near the upper time down to seemingly hang around the middle time. And that's just about what we've had, as even now we're seeing the market staying around the middle time. Finally, the remainder. There were weekly key reversals down in sterling yen, the Chinese yuan against the Japanese yen. This one is interesting and worth keeping an eye upon. Finally, there was also a weekly key reversal down in Felix Semiconductor Index, another one to watch. As for weekly key reversals up, there was only one I look at: US dollar against the Israeli shekel. I'm happy to share my videos, various charts, and answer any questions with anyone who's interested. And with that, I'll finish this section from London, and I hope you found these comments useful.